This is the Sales Bible Podcast, episode 230, Bitcoin Business and the International Blockchain Conference.
Welcome to Sales Babble, the podcast that shares selling secrets for non-sellers. And now your host, Pat Helmers.
Hello, Sales Babblers. This is Pat Helmers. And last Friday, I attended the International Blockchain Conference. It was down in Chicago, and met a whole lot of really smart people who knew an awful lot about Bitcoin and cryptocurrencies and blockchains and things you probably don't know a whole lot about. It's become a real passion for me because, well, let me tell you a story. Last October, I work out of a makerspace, Foxville. I think I've mentioned this in the past. And we were visiting other makerspaces in Chicago. And it was kind of an outing. We took the train down there. And to get around town, we took a couple Lyft rides. And my colleagues had never used Lyft, didn't have those apps on their phone. And I'm a big supporter of them. So I actually paid for the rides. And when you add it all up, I probably spent about, $60, $65 touring us around Chicago. My buddy Rick Carlino said, well, Pat, I want to compensate you for this. I want to pay you. How would you like it in Bitcoin? And I was like, sure. He had $9 in his Bitcoin account in January of 2017. He looked in there, and he had like $85. So he was like awed because Bitcoin had run up quite a bit. And I'll dig into that, why that's all about in a little bit. And he said, well, why don't I just pay you? So he paid me about $65 in Bitcoin, but I didn't have a Bitcoin account. I had a Coinbase account that I had set up before. Couldn't remember the password, so I downloaded a Bitcoin wallet. I had to type in this weird, bizarre password. We did this in a bar. We exchanged QR codes. He sent me like $3 worth of Bitcoin. It took 10, 15 minutes for it to transfer. We looked, and it did work, so we knew that we'd had the right accounts all lined up. So then he transferred to me like $66, and again, it took another 15, 20 minutes, and eventually it got into my wallet. Amazing. That was probably in October. It was around mid-December I came to this realization, like, wow, Bitcoin had my account had gone up to like $175. How crazy is this? And I didn't really understand what it was all about. But I did know this. I wanted to get my $65 back out of it. So I figured out what my Coinbase password was. I transferred it from my wallet to Coinbase. I got charged a fee. And then I converted my Bitcoin to about $65. Well, actually, it was to $84. So I actually made some money, to $84 in US dollars. They charged me a fee. And then I transferred that money to my Chase account, and that was actually free. With that said, I still had a lot of money in my account, and it's still there today. I've still left it in Bitcoin. I learned so much about how this whole process works, how convoluted it is, how confusing it is, and also the power of that. So last winter, I started going to some crypto meetings, found one that was really great. They stopped meeting. So I started the St. Charles Cryptocurrency Club last winter, and we meet once a month. And it has been really, really fascinating how all this works. And because of that meetup, I've learned an awful lot about cryptocurrencies and Bitcoin and blockchains and all that kind of stuff. What's this got to do with you guys? Elsa Kitt is a listener, an avid listener of Sales Babble. And we were chatting about this one day, and she said, Pat, you should talk about this because you've taught me more in 15 minutes than I ever knew. And I thought, well, that kind of makes sense. And that's what we're going to do today. We're going to talk about Bitcoin and cryptocurrencies and blockchains, the innovations, what it's really about, why it's here to stay, and why it matters to you. Some people like to say that Bitcoin is where the internet was at in the mid-90s. Because back then, nobody knew anything about HTML, HTTPS, DNSs, how to use a browser to go to places all over the world. And so people look at cryptocurrencies and they wonder, is that where we're at? Or is it more like Betamax and Laserdiscs and Google Glasses and the Samsung Note, technologies that are now on the rubbish heap? people have this idea that, well, Bitcoin is something that maybe felons use to buy drugs and nefarious things on the Silk Road and in the dark web. And that's reasonable because that's kind of what the mainstream press commonly states, and there's something to that, but that's not it at all.
Okay, my name is Scott Diamond with the Chicago Digital Asset Network.
So I asked an expert.
Kind of bad press. Say the first generation of bad press in cryptocurrencies was, drug dealers and pornographers and all that kind of stuff. And I kind of remind people that the number one currency that criminals use today is the U.S. dollar. It has nothing to do with Bitcoin. In fact, actually, the future of Bitcoin being used for nefarious purposes is going to continue to decline as there's more and more traceability throughout the blockchain. So
that's interesting. Remember, Pablo Escobar was burying it all over Colombia.
Yes. Yeah, absolutely. So, these new application layers that are going to come out on top of the protocol layers, like an Ethereum or an EOS or Bitcoin, those are going to provide it's going to provide the vision that the next generation is going to have.
Very few people, for the most part, truly understand what Bitcoin is because it is extremely nerdy. It's extremely technical. It's far too difficult for the average person to get into this. So when it comes to the adoption curve, they say, the early adopters are the top 5%. I think we are at 0.01% right now. Very, very, very few people understand this. But as people become more and more interested in this, all generations, I have seen extremely young people get excited about crypto. Oh, I have seen a ton of baby boomers who are extremely interested by this. When Bitcoin started, it was like 6 cents a Bitcoin. In December 2017, it was like over $18,000, and some exchanges over $20,000. In fact, there was so much silliness about it that a company called Long Island Iced Tea renamed itself Long Blockchain Corporation, and they saw its stock rose 300%. Evangelists think it's revolutionary, and it's going to have more value than fiat currencies. And by fiat, I mean traditional currencies like USD, US dollars, UN, euros. What makes Bitcoin different from the rest is it's not backed by a government. It's a decentralized digital currency. There's no central bank. There's no government controlling the supply of money. And it was invented with the goal of having no fees. It's open source so that people can see all the software. So if they find bugs, they're going to share it with everybody. So it's going to make it much more reliable. And it's going to provide provincial freedom with no government control, lots of libertarian kinds of things. A lot of this stuff didn't turn out to be true. And in fact, there's limits to what Bitcoin can do. So people have started inventing alternative cryptocurrencies, and some of them have nothing to do about decentralization, nothing about not having government control.
Charles Kwan. I'm the co-founder and executive chairman of OmniSparks. Well, the promise of these decentralized economy is that you have all these different people, vendors, investors, programmers, all focused on building this decentralized project. And the dirty little secret is to make that work, these cryptocurrency organizations need to be able to work with and identify and work with and incentivize these people. Otherwise, people kind of move on. They're kind of like nomads. So
kind of build their loyalty up and make them active participants.
Be a citizen, right? You need them to be part of the citizen, part of the vision. Otherwise, they'll just move on to the next project, because that's kind of the way these people kind of do things. So what we've done is we've actually built a platform that allows a cryptocurrency organization to look and be across multiple different channels.
But the bottom line is that the idea was that these coins could be used for a means of payment. And because there's no government control, there's no Federal Reserve adding money into it, there's this process known as mining, where supercomputers can actually create a little bit of inflation. Because in order to make these whole networks run, these people got to be compensated, and that's how they're compensated.
The way that the pricing mechanisms work, obviously, is just strictly supply and demand. I mean, Bitcoin doesn't have a board of directors. They don't have to beat the street. They don't have a number They don't have product fails. They don't have, FDA regulatory approval that, shoots up stock prices. So people, I say, when you're trying to get involved in this space, and let's say you are purely doing it from a speculative investment standpoint, the first thing you need to do is you need to take your first world financial brain and put it on a shelf, because Bitcoin is not a stock. It doesn't pay dividends. It doesn't have a board of directors. You can't sue it. You can't do a class action lawsuit against Bitcoin because there's no corporate headquarters. There's no person sitting behind a desk. It's purely a peer-to-peer and voluntary system of value transfer that continues to grow.
And why does it grow?
Well, I mean, it grows because it drives interest. When people ask me this, like, well, how could, a single Bitcoin be worth $6,000? And I just say, well, turn the question around. Like, why does it take $6,000 to buy one Bitcoin? And that might just tell you a little bit about the pricing mechanism. For hundreds of thousands of years, people were using rocks and feathers, and then they got into precious metals, and then the precious metals started giving way to bearer bonds and into fiat currency, and then the currency was decoupled from gold, and then further decoupled from gold in the 70s. But at the end of the day, there's never really been an honest price mechanism to fiat currency, and you see that because when Bitcoin, say, goes from $6,000 to $7,000. It's going up 18%. Well, it's also going up 18% against the yen, against the euro, against the Australian dollar. So they move in lockstep, these global fiat currencies, because there's a lot of attempts for people to try to take advantage of some fiat arbitrage opportunities across different exchanges in different countries. But it doesn't really work because there is a latency issue, and it's not like an instant trade where you're able to execute it. So so I just say it's like, what if Bitcoin is the first honest pricing mechanism of fiat currency? If that's the case, then why is gold worth $9 trillion or $7 trillion, depending on where you look at it? If Bitcoin is 10 times more, has more utility than gold, then if Bitcoin's a $9 trillion asset someday, you're talking about $5,000 Bitcoin or $500,000 Bitcoin.
The foundation of Bitcoin and all of these cryptocurrency coins is this database that backs it, that's split across this entire network, and that's called a blockchain. It's a record and it's a ledger of every transaction stored and distributed in the world, and it's unhackable. You may have heard that, Bitcoin's getting hacked, but the actual database never can get hacked. It's what they call triple entry accounting. I got a record that you and I made a trade, you got a record that you and I made a trade, and the database has got a record that you and I made a trade. And the whole idea is that this is so safe, you don't even have to worry about trust. It's a goofy term that they call trustless. There's no need to trust in the third party like a bank. And blockchains are being used for all kinds of things. Walmart, IBM, JP Morgan. There was even talk about the election in Sierra Leone was using blockchain for its elections. It turned out that to be false. But there's a lot of interest in doing these kinds of things. The technology is moving very fast. What's your name?
Dima Alisa.
And what do you do, Dima?
I'm a serial entrepreneur, techpreneur. I currently am co-founder of Symptomatic, a healthcare data interoperability company, building distributed apps and looking to improve the healthcare system overall.
Are you here in Chicago?
We are based in Chicago, but we work everywhere.
I just saw you on the panel. You did a phenomenal job.
Well, thank you.
And what I liked about it was you made a very strong argument on the power of blockchain in medicine. Why do you feel that's true?
So fundamentally, blockchain is an evolution of technology, but it's here in healthcare to deliver a revolution that allows you to take control of your personal health records, to really understand the ins and outs of your personal treatment, along with your providers, so they can see and have access to your data on a on-demand, as-needed, accurate, reliable, trusted basis. It takes the right climate, the right environment, and the right pressures from various stakeholders to really bring innovation and change to bear. Nobody likes change, but in healthcare, it's so necessary. And blockchain is one of those technologies that can really disrupt in a way that liberates data all day.
Like, I was thinking that if we had all this information on various patients and using certain amounts of equipment and whatnot, the possibilities of doing process management on that and better understanding creates opportunities of optimization.
Absolutely. There's several different blockchains that today really deliver supply chain optimization, for example. In the prescription drug development supply chain, where there's a lot of fraud, corruption, and unfortunately things like the opioid crisis are a result of that. And so we have opportunities to leverage the efficiencies of blockchain to reduce or eliminate those kinds of scenarios.
And alleviate costs, is that a possibility?
That is inherently baked into the entire premise of blockchain, because when you increase efficiency and create a better trusted system, you can monitor and create transparency and awareness without people's involvement. So it's automated and automagically able to automatically able to improve your bottom line.
So like we said, the thing about the blockchain is it's a big database, and it creates a lot of possibility for storing stuff. And that's where all these other altcoins, alternative coins like Ethereum and Dash, Ripple, Litecoin, and Tether, they all have they're all doing something different in the blockchain other than like with Bitcoin. Bitcoin's only real job is to be a currency. But something like EOS and Ethereum, they're actually providing computing services. They have applications in them. They have apps inside of them. They have computing inside of them. And anybody can use them. And the way they do is then buy a token in order to do that. And a token is commonly associated with a coin. And sometimes people use the term coin and token back and forth, but the whole idea is the coin is kind of the value of the work that you're or the service that you're providing, and the token is actually the thing that you turn in order to get that service. And that's kind of what all these different altcoins are all about. And for a lot of these people, it's not about making a lot of money by buying and trading the coins. It's really about the value that service is actually providing. So when we think of a lot of these coins, you don't think of them in terms of Bitcoin. You think of them in terms of these are tech companies that have a tech market that they're working on, which goes to the idea, how do these tech startups get off the ground? And a lot of times it takes funding in order to do that. Usually, the way a company does that, they do an IPO, an initial public offering. But in the case of these cryptocurrencies, they do an initial coin offering, where a coin is sold to investors. And if you come early, you get a better rate than if you come later. And then if you come really late, then it's just sold on the open market, and you don't get nearly as good a deal, dollars per coin. And as you may have heard, 90% of the ICOs in 2017 went out of business. Let's go back to Scott.
The criminal thing has now been essentially debunked, and it's being used more and more for legitimate purposes. Then the next thing is going to be well, look at all these companies that started and failed. And that's what's going to be happening this year. I actually was thinking was going to be happening earlier, but for all of the ICOs that were happening in 2015 and 2016, people are starting to realize it's in order for this to be successful, we have to be able to make sure we're building something for a marketplace, and we also have to be able to keep people employed. They have to have developers, and those developers have to stay. And there's so much movement from an employment standpoint in and out of these projects that nobody can really catch any steam. So I think what's going to happen is you're going to see a lot of people running out of money. You're going to see some people who are going to say, well, we still have X number of millions of dollars left in our account. Well, let's just split it and go. I think you're going to start hearing a lot more about those things. There's going to be, but out of those ashes will rise the phoenix of the next generation of usable services, because people aren't going to be investing in projects unless somebody's already done most of the work up front, as opposed to just saying, here's our idea, give us some crypto.
So the idea of creating greater integrity and understanding the value that this tech company is providing to the marketplace, that's what OmniSparks is working on that I saw at the conference. Again, here's Charles.
So what we've done is we've actually built a platform that allows a cryptocurrency organization to look and be across multiple different channels. And that's why it's called OmniSparks. It allows you to communicate with these individual stakeholders, first identify them, but then be able to communicate them via Twitter, Slack, Telegram, Reddit, whatever channel they like to use. LinkedIn, absolutely, Facebook, what have you. So by doing that, you can actually communicate with them. first you authenticate them to make sure that they are actually our investor, for instance, or a programmer or what have you. And then once you do that, you can start to communicate with on the channel that they really prefer. From there, for the stakeholder standpoint, they actually have the ability to authenticate and have a direct linkage to the projects they actually invest in, which doesn't exist today. Today, like if you invest in a project, I mean, you hear horror stories where they're like, well, how do I saw the white paper, I just made an investment. How do I talk to somebody in the organization?
Oh, yeah, like 90% of the ICOs are bankrupt.
That's right, exactly. So that's challenge. So to realize a promise, you need to get these stakeholders to actually be identified and start to build the community. OmniSparks does that.
So the big conversation commonly around these cryptocurrencies is why is their prices so volatile? Why are they going up and why they're going down? And despite all this conversation about being trustless, a couple of professors out of the University of Texas in Austin actually be able to point that there has been some manipulation of the price. Since so few people own this, it's not very hard for a few people to get together, and if they've got the funds to start purchasing coins all at once, and it'll raise the value, right? That's just classic supply and demand, right? And then, but they all collectively, because they're working together, know that it's time when it's time to sell. This is what's known as a pump and dump scheme. And that's what those professors believe happened in November and December when it came to Bitcoin. So we're going to see these kinds of things over time. But it doesn't mitigate the fact that this technology's got legs. It's going to last. The thing to remember that if crypto threatens the status quo, it's going to be regulated. And if crypto breaks monopolies, like the financial institutions, the central banks, and government, it's going to be regulated, and it's going to be squashed. We saw China do this. They've taken down exchanges, and India's talking about doing the same thing. But again, I believe Bitcoin is here to stay. It is the first mover. And probably one of the big realizations I got at the conference was that all the other cryptocurrencies are constantly being traded to Bitcoin and maybe from Bitcoin to another kind of currency. They're not going to dollars and back. Bitcoin is the central currency for all those exchanges. That's why I believe it will last. And blockchain in and of itself is a disruptive technology in many, many industries, in fintech, medtech, artificial intelligence, in elections. We haven't even talked about something like smart contracts, where two people come to an agreement that they're going to make a deal, and then when both pull the trigger at the same time, then the deal happens. Picture that with music, where the listener has a smart contract, and it automatically splits the royalties between the performer and the producers. The whole thing about this technology, and this is what I love about it the best, is that there's no best practices. The whole kit and caboodle's a green field. Problems and solutions exist, but how do we get there? Lastly, where do you think where are we going to see this in real life soon?
So we're already working with folks at UPenn, at Duke, to really build in the smart contracts, the capabilities of everything from deciding your end-of-life care to how you and who gets to be part of your network of credentialed, authorized treatment providers. So healthcare insurance companies will have their own blockchains that will identify who gives what level of care, what are the parameters of your particular insurance program that you've subscribed to, and how efficiently that information can be accessed is one of the principal areas. Systems, for example, like big hospitals that absorb new companies that are not able to speak to each other. That's kind of what Symptomatic can do, is transcend and connect those to speak the same language in an interoperable way, right, and leverage their existing blockchain systems. So there's really fluidity and harmony that can be applied across so many healthcare areas. I mean, think about your own doctor and knowing what actual credentials they have, and if they're up to date, and what their specialties are, and if you want them to treat you somewhere that's not in your backyard and across country, blockchain solutions can absolutely eradicate that problem, because it's plaguing the care and the speed of delivery.
In this episode, we've delved more in the area of business versus sales. But sales is business. If you're not providing a value, the market's not going to buy it. And it doesn't matter how hard you sell, how much cold calling and how many emails you send out. If you're not providing value, people aren't going to buy. So I think it's important that each of us understand what's on the horizon, what's going to be next. And I sincerely believe that these technologies are going to affect you sooner than later. If you go to the show notes at www.salesbabble.com/230, that's 230, you can find links to cryptocurrency and some of the places that I'm really finding value, podcasts and blog posts and websites that I go to that have a lot of value in this. If you got any questions or comments on this topic, I would love to hear from you. Don't hesitate to click on the Babble Me button or reach out to me on LinkedIn or send me an email. I'm easy peasy to get a hold of. That's all I got for this week. Until next, take care and have a highly successful and profitable selling day.
Thank you for listening to the Sales Babble podcast. Find us at www.salesbabble.com.